you have a price series of the S&P, you can calculate a trend. Statistics 101 is not difficult, and you can work out how far away from trend you are. And a 2 sigma is the kind of deviation that should occur every 44 years. And because we're a little wilder and less efficient than we should be, it occurs every 35 years. It's not bad. It was a little closer than I expected back then. But every 35 years feels about right. 1 a career, twice a lifetime. That feels like a pretty decent definition of a bubble. And a 3 sigma should occur every 100 years. Now we, as I like to say, we do crazy pretty well as a species. So they occur much more, 2 or 3 times more often than they should. They're out of kilter much more than 2 sigma. So 2 sigma, you can have some fairly standard bubbles. They give you a certain amount of pain, 30, 40, 50% pain. Super bubbles can really wipe you out, like 1929 did. And that's where we are now. We entered a few months ago into 3 sigma territory, super bubble territory. And the other great risk is last year we also entered bubbles in real estate. This is a very dangerous year that we've just had.
If the super bubble bursts, as you predicted will, what happens to the economy? What does history tell us?
Some bubbles are very specialized to U.S. growth stocks, like 2000. And they hurt. There is a wealth effect. People lose money. They pull back on their spending. But they don't hurt anywhere near as much as when you combine that with a housing bubble. So in 2008, where we had the only housing bubble in American history, that burst and the stock market came down 50% in sympathy. Then you're talking serious damage to the economy through the income effect. Because this time we have, as a multiple of family income, U.S. housing suddenly is more overpriced than it was ever in the housing bubble of 2006 to 2008. And it got there this last year, the biggest increase, 20%, that the U.S. housing market index has ever had, has taken it to a new high. And they are, in the U.S., still much cheaper than Canada, Australia, New Zealand, London, Paris, etc. So that is a global event that could cause enormous pain. So we have a housing problem. We have a stock market bubble like 2000. We have overpriced commodities. Oil is 88. And we have, of course, the lowest real rates in the history of man. Now you have a much higher ratio of debt to GDP. You have much more debt on the balance sheet of the Federal Reserve, and you have much lower rates. I haven't written about inflation for 20 years. When I did quarterly letters, I never featured inflation. I didn't think it was on the radar screen. It is now on the radar screen once again. It's not that inflation will go roaring back to 1972 or 1982. It's that it will always be part of the discussion from now on, in my opinion. Instead of forgetting about it, it will be spiking and irritating and falling back and then spiking again. It will be part of the scenery in the way it used to be in the second half of the 20th century. There's a lot about this economy, I think, that will be dragged back into the late 20th century. We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. Let me put it this way. We're in the early stages of running out of raw materials. Of course, we live on a finite planet. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries. And we're going to have bottlenecks here, there, and everywhere. The food price index of the UN is about as high as it gets. Growing food is not getting easier. Climate change is coming with heavy floods, serious droughts, and higher temperatures. None of these make farming easier. So we're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it. Commodities have a long history of doing quite well when inflation picks up, for obvious reasons. And inflation is quite likely to pick up. Looking out into the future, it is pretty clear that we are running out of labor. Fertility rates have dropped like a stone. China is reeling from the shock of finding that it has 10.8 million babies last year. It's only the other year, 7 or 8 years ago, it had 20. And this means absolute certainty that the cohorts of 20-year-olds coming into the workforce will be smaller going forward. Everywhere in the developed world, we're below replacement in fertility.
The Federal Reserve is confident that it can contain inflation with a series of incremental rate hikes. What do you think of it?
I think the Fed absolutely does not get the pain that's involved with a bubble breaking. You can see that in the history of the last 50 years. And what have we learned? We just went straight back into the game, overstimulating, pushing the rates down and down they have gone for 50 years. They started at 16% on the long bond, and now the real return you would get is -2. They act as if a low rate is a panacea and comes with no downside. That is clearly nonsense. It's created, I think, the biggest evil in our society, and that is inequality. If you drive up the price of assets systematically, and it's bound to happen if you drive the rates down to negative territory, who do you make money for? You make money for the people with assets. Who owns the assets? The top 1% has 35% of all the assets. The top 10% have practically all the assets. What's the asset ownership of the bottom half? A rounding error, practically none. So you mark up the assets, and that's your contribution to society. What you're doing is pushing down on labor, pushing down on the bottom half, with no offset from increasing their assets, since they haven't. And you're making the top 1% ineffably rich. And the data bears that out right down to the last 2 years, when the top 0.1% has doubled its wealth during COVID. And the bottom 50%, I can assure you, has not doubled its wealth. If we do not address rising inequality, we will be in real trouble. We are the least equal society, measurably, in the developed world. It's a poisonous influence. I'll tell you what I think about the future, and that is the green will turn out to be just a subset of a bigger, more comprehensive issue, and that is, loosely speaking, living within our means. We have simply shot way beyond the long-term capacity of the planet to deal with it. And one of the problems is waste. And this is not just climate change and greenhouse gases, but of course, plastics. It's also poisons. We generate so many toxic chemicals that there is strong indication that the planet is really not conducive to life. We are killing off our insect life. We're killing off all manner of animal life. The world can do just fine without Homo sapiens, but it can't deal without insects because of a cascade effect. All the little critters that eat insects, all the birds that eat insects, all the amphibians, etc. And they begin to go out of business. And then the things that need them, the plants that needed them to be fertilized, one thing after another goes out of business. And so nature is beginning to fail. And in the end, if we don't fix that, we begin to fail as well. And we see that in the toxicity numbers. Human fertility is going to hell. We have 1/3 of the sperm count that we had at the end of World War II. This is not impressive. Mostly we were over-engineered, so we get away with that. But in the last 20 years, we've gone from young couples needing help, a rounding error, to maybe 15% of every young couple in the US now needs help. And that's more or less a global problem.
So green investing isn't just a way to make money, it's an existential necessity.
It's an existential necessity, and it's part of a bigger problem, living beyond our means. We use up our resources. We put too much pressure on the natural environment. We poison the natural environment. And in that sense, it's a lot bigger issue than climate change writ small.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. The fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, You won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.